Hello, ladies and gentlemen. Welcome to our panel discussion titled Dimensions of Digitization in Banking. Today's discussion is focused on how business leaders can leverage fintech innovations in merchant onboarding processes and while implementing consumer adoption strategies. Fintech has completely revolutionized the basics of banking. And to analyze this topic further, I have with me two industry leaders Rajeev Kumar K, Senior Vice President, Market Development South Asia at MasterCard, and Arpit Ratan, co-founder and business head at Signzy.com. Hi, Rajeev and Arpit. Thank you for joining us today.
Hi, hi, Rudra.
Let's, let's start our discussion with my first question for Arpit. Arpit, the merchant onboarding process has historically been a long, drawn-out affair, right? What are the
Yeah,
most prominent fintech innovations that are enabling EODB for merchants?
yeah. I think if we want to understand it, there has been through years a lot of processes which were involved when you were onboarding a merchant. Typically, any bank would take 2 to 3 weeks in a good scenario, and sometimes it could even take more than a month to onboard merchant. And there was just huge amount of paperwork, huge amount of checks that need to be done on the back end as well. And I think what has changed and some of the things which the government also has really done well. One of them is GST in India, which has allowed for easy, quick verification of the businesses. We have now adopted digital signatures, which have become very prominent, especially by use among businesses, which has helped. There has been, I think, huge amount of, and this is something which is across the sector, but I think there's been significant development of AI, and which has truly transformed a lot of these manual processes and made them completely automated. And that has reduced the time, as we had done one of the launches with MasterCard. We were able to bring this time to almost 30 minutes from 2 to 3 weeks. And there has been a sea change. This is not incremental. This is a sea change, and the way you're onboarding merchants today is significantly different than the way you were doing them almost a year ago.
So what I hear is that the GST has now presented a centralized, standardized, and a credible sort of data source to be able to sort of standardize this process the way you're looking at it. Is that correct? I mean, is that the main sea change that has happened in the recent past?
I didn't know that is one of the attributes, but if you look at it, right, whenever you were developing any process, there would have been, let's say, hundreds of rules that were typically being consumed by a human operations team. And
Hmm.
that human operation team would then look at each merchant file. They will try to match everything, try to run those rules manually. If there was any change, they would go back, and that is why it took so much time. There was just so much back and forth in the system. Anyone who was trying to open an account as a business or get a POS would have gone through this pain. And one is, of course, this data is available more easily, which is because of GST. I think the sea change has come because of the advent of AI. Because AI is now so advanced that a lot of these rules, a lot of these decisions which were being done on a human back office and took actual time are now happening on front ends. They're happening on your
Yes.
mobile, they're happening on your computer screens. And because of that, I think there are real time responses which have reduced this back and forth in the system and brought that time to almost the time that would take a merchant to fill up a form online and do these basic checks. But yeah, GST definitely is a great enabler for that.
So, so the technology is now basically available to be able to do all of that. I mean, AI has been a huge sort of benefit in this regard, is what I understand.
Yeah.
Mr. Rajiv, as per reports, Mastercard has targeted 10 million merchants in India by 2020. I mean, that's this year. What are some of the most important initiatives that you have taken in this regard so far?
Yeah, thanks. Thanks for the question, Rudra. Acceptance development is one of the key pillars of our strategy in India and remains so. I'll begin with an interesting statistic which highlights as to how we have invested and how we have powered digital acceptance in India in the past few years. While ATM numbers have remained flat at around 240,000 ATMs around India, digital acceptance at POS and online, which is primarily the number of places where a customer can use their cards, has increased from 13 lakhs in 2015 to 70 lakhs, which is a growth of 5 times in the last 4 years, 4.5 years, which has been phenomenal. And most of this growth has come primarily from tier 2 and 3 and small towns and villages around India. And what is it that MasterCard is doing? We lead in supporting the entire digital acceptance ecosystem, and we focus on 5 primary areas. And these are, I'll quickly read out the 5 areas where we focus. One is thought leadership and support to the entire acceptance ecosystem, covering acquirers, payment facilitators, POS suppliers, and service providers, and fintechs like Signzy. Number 2, laser focused on bringing down the cost of POS and digital acceptance deployment. Again, I'll give a very interesting statistics and add to what Arpit just mentioned, and increasing the speed of POS and online acceptance deployment. These are 3 primary ones, and we are also constantly working with the regulators like RBI, MeitY, DFS to ensure that we support their less cash India vision and a higher digital footprint vision. And the last one, from a speed of checkout point of view in the last few years, which has picked up speed, is supporting contactless transactions, especially transactions below 2,000, which is a bulk of the transactions, is another focus area. These are the 5 areas we have focused, absolutely focused. And I'll tell you where and how Signzy fits into this whole vision of ours. Our partnership with Signzy began in 2017, post demonetization, when there was a huge pressure on increasing the digital footprint and helping the government to get customers to use their cards in their wallets at many more places than what it was. It was very small at 13 lakhs, as I just mentioned. So we signed up with Signzy as a fintech for digital merchant onboarding for India specifically, and then took them and introduced them to various acquirers and payment facilitators. And we had instant success where, as Arpit just mentioned, we brought down the cost of acceptance by 90%. A typical cost of acceptance in India is around 2,000 to 2,500 rupees based on the traditional ways of acquiring. And with Signzy's support, we brought down that cost to less than 250 rupees, because the entire paper-based process of KYC went away, and it was all digital, and we brought down the cost of acquiring, and we also increased the speed of acquiring merchants by 90%. What, as Arpit mentioned just now, was taking 2 to 3 weeks to onboard a merchant, and in some places over a month, depending on how close you are to an acquiring bank, that came down to 30 minutes. So these are 2 important things that we could achieve with our partner with Signzy. And then we didn't stop at keeping Signzy here in India itself. We also decided we need to solve similar problems globally. So we took Signzy globally. We signed a global agreement with them. And we are now solving similar problems across the world in the acceptance space. And from an acceptance vision point of view that you just mentioned, 10 million merchants is what we are looking at, ticking a box off and making India one of the largest digital acceptance markets. But our medium-term vision is to actually grow to 20 million merchants, which is what we believe is the opportunity that exists in India, with 70 million MSMEs, out of which we believe 20 million are B2C customer-facing merchants who need a digital acceptance solution. So our end vision for India is to get to 20 million acceptance locations as quickly as possible.
Right. And the 10 million target of 2020, we are sitting in September. Would you say, without giving an actual number, would you say that we are well placed
We
to
are
get to that?
absolutely well placed. We are looking at getting to the 10 million number in the next 1 to 2 years maximum.
Wonderful. So, yeah, I mean, clearly demonetization was the major sort of push or move for this change to happen in the market. I mean, and the government's intent is very clear. There are no two ways about it, right? And but to add to that, I mean, I understand the process started then, but to add to that, the current situation, the pandemic, has really sort of given it an even much faster push. I mean, all of us all our transactions we want to do it digitally today. People in some ways are also scared of cash because it has understood the transmission could also happen through cash. So there are many reasons. So you're saying that this partnership happened at the right time and the results have really sort of are out there. I mean, the reason that you've gone global is clearly to show that this is working well, right? For for,
Absolutely.
for both partners. Wonderful. So
Yes.
thanks, sir. So, Arpit, coming to you, what operational and financial inefficiencies are AI and blockchain mostly targeting in terms of in terms of merchant onboarding? I mean, Mr. Rajiv just mentioned a huge drop in cost from 2,500 to 250 per merchant onboarding. That's massive
Yeah.
savings. And obviously, if you scale it up, it's a huge amount of money. So, what are
Yeah.
these operational inefficiencies that you use technology for?
Yeah. So, what has happened in the last decade in terms of digitization is that there has been focus on user interfaces. So, if you see, you have digitized user interfaces, whether it's your websites, apps. One thing I think which has not really evolved is problem solving, which is the ability for the system to also not just interface with you through a digital medium, but also to solve the problem that you're originally trying to solve. And I think that is where AI comes in, or even algorithms comes in. And I think the next wave of digitization has to be intelligent systems. It has to be systems which are going to solve problems, not just give you a great user interface, not just a great design, not just a great UI, but some things which will actually solve the problem. So when it comes to merchant onboarding, it's the same thing which we did. So a lot of acquirers, a lot of payment gateways already had digital interfaces. So we were not solving for a digital interface. All of them had emails, all of them had websites. What we were solving for was that the problem solving was not being done through these systems. Somebody would just give data, and a very dumb data input would reach a human team. And then it's a human team which will process, which will decide, which will make a decision whether this merchant has to be given a financial instrument or not given a financial instrument. And this decision was being made by a manual team, and hence so much time, hence so much cost. The next wave in
and,
digitization,
and sorry, and bias, right? I mean, that's also
of
very,
course,
very important. Human bias is a huge element.
I think in India, two more things, right? Error and fraud.
Yeah,
We
exactly.
we genuinely believe that all financial frauds always have been through human interventions. And I know it's a bold statement, but it's historically true. And I think one of the things that you're doing by automating that decision making is also removing that human fraud that creeps in. Um, and and when you remove that human intervention, you are able to make that process much more efficient, not only in terms of cost and time, but you're also able to bring a better user experience. Because user experience, if you look at Amazon, Amazon is not the best e-commerce website, it's not the best looking website, but it has the best response times. It is the best to deliver a product. It can accurately tell you on day one that your product is going to be delivered on 27th of September. And that problem solving, or that intelligent, is what is the next revolution, which for which you use systems like AI, you use blockchain for some of these functions. But what essentially you're trying to do is systems which are intelligent and solving problems. And I think that's going to be the next wave. And that's what we did for merchant onboarding, where we were able to bring down that time and that cost.
Very interesting. What you're essentially saying is that technology is not only helping on the supply side. I mean, companies such as Mastercard, etc. I mean, because reducing process time, costs as well. But it's also great for the merchants, the customers. They are able to get onboarded much faster than what they would expect earlier, and it's transparent and fair, right? That's key. So this is really interesting. Mr. Rajiv, coming to you and Signzy is one fintech innovation that you've clearly leveraged and it has worked very well. How has Mastercard leveraged fintech innovations in order to build greater financial inclusion? I mean, there are several other opportunities and processes that you would have, right?
Yeah, you're absolutely right. And I'll try to paint a picture as to what we're doing way beyond merchant acceptance. I'll try to paint a picture of that. If you
Right.
look at what's happening out here in India, tier 2 and 3 towns are growing 2.5 times that of metros. For instance, 70% of new digital acceptance growth is coming from tier 2 and 3 towns and villages, not anymore from the big metros. That growth is done and it's behind us. For instance, we now have 25 million e-com users in India, which is likely to grow to 125 million in the next few years. Most of it, again, coming from tier 2 and 3 towns and villages. As I mentioned, acceptance locations growth from 13 lakh locations to 70 lakh in the last 4 years, most of it coming from tier 2 and 3 towns and villages. Now, for instance, we also provide a very important and unique service in partnership with UIDAI and Aadhaar, where we power several state governments to provide DBT services to their citizens. And we continue to expand on that front. In each of these areas that I mentioned, we have partnered with some fintech because we found we do have a gap in the product or service, or we have a fintech like Signzy, who's got the ideal solution which suits the Indian conditions and the Indian problems that we have. And that's how we partnered, for instance, in the acceptance ecosystem with Signzy to bring down the cost of acceptance and increase the efficiencies there. Likewise, we have partnered with a company called Citizen in order to sit between MasterCard and the state government to provide Aadhaar authentication services, that is ASA, AUA services, to provide citizenry services. With another fintech who's a specialist in the transit space, we are solving for the transit problems that we have. And the way we do this is primarily through a flagship solution called StartPath program that we have, which supports early stage fintech startups like Signzy. We invested in Signzy way back in 2018. We've been investing in several companies like Signzy, mostly Indian fintechs, to solve for the financial inclusion piece. And proud to say, we have invested in over 7 such companies in India, and a few of them have been Indian assets, which we have taken global. We have taken these partners to other markets to solve for similar problems elsewhere. And in order to support this, what we do is invest a lot. You'll be pleased to note we have invested in the past 4 years over $1 billion, around 7,000 crores, in order to build infrastructure, products, and solutions to solve for financial inclusion and the challenges that we face, which are of unique nature in our market.
Very interesting. I think the most important thing of note is Indian startups for Indian problems, because which are very very peculiar to this country. I mean, this is a favor I note across most I think sectors is that it is very hard for global companies and global sort of solution providers to come and look at India unless you have that Indian understanding of the challenge, because that is often very different from what is happening globally. But even bigger note, Mr. Rajiv, is the fact that these companies are now going to other markets as well. I mean, if you found a solution and you can adapt it to other market conditions, why not? Fabulous. Arpit, coming to you. how does the adoption of banking technology differ from among different consumer groups, and how can we sort of leverage fintech innovations to create more financial inclusion? This takes from what Mr. Rajiv said.
Yeah. No, I think India that way is very, very unique, right? We have people who speak different languages, different dialects. And I think the challenge with India is not only the technology, but the adoption of the technology.
Right.
One of the things, for example, what we have done with one of our video KYC solution is we have launched it in multiple languages. So we would be the only solution which is available in multiple regional languages. And I think that challenge we came across because when your application is facing the consumer, and as Rajiv was speaking, that a lot of them are now coming from tier two and tier three towns. Um, their proficiency in English would not be good enough for them to have a good experience, and hence you need to make your systems which are suitable to those geographies. So, for example, one of the innovations we've done is that we would allow the person to choose their language even before they start their journey, and even their entire experience is in their regional language when they're onboarding. And this definitely helps in adoption. Similarly, we have seen that among consumer groups, when you're targeting for people in tier two and tier three towns,
Mhm.
the bandwidth that is available and the kind of mobile phones that are available are very different. And I think that was a huge learning we had in India. In fact, there was one interesting incident we came across. There was this big solution from Europe which was trying to provide some video based service, and when it finally came to a bank, the bank realized it will only work on the high end iPhones, and that would be like 0.1% of the Indian
Yeah.
consumer, because a lot of these European technologies assume that everyone has an iPhone, right? Or everyone has a high-end phone. And I think being in India, you get this learning where you try to. So today, for example, when we build for 23 types of browsers, because India has like all kinds of phones, all kind of browsers, all kind of mobile devices. So I think that's
Wow.
interesting thing being in India,
Yeah,
that you.
also built for 2G, right? I mean, technically we are 4G, but 4G is hard. I mean, we know how our 4G is. So you technically have to build for a 2G ecosystem in terms of internet bandwidth, right?
No, you're absolutely right. In fact, we built our video KYC, which is now, I think, video KYC is this big buzz. We actually solved to make that video KYC work on a 2G connection, because we had
Yeah.
to solve it. And now, of course, we've done some technology engineering there. But you're absolutely right. I mean, you cannot take a video KYC which is working, outside India and bring it to India, because it just won't work. So you have to do these hacks in India. You have to build for India when it comes to scaling to tier two, tier three towns.
Thanks, Arpit. My last question for Mr. Rajiv. Please tell us how has the KYC process evolved, and what is the future of KYC? I mean, there's a lot of conversation around this, and especially using Aadhaar, etc. So, how has it evolved, and what is the future of this system?
Yeah, interesting question. When we began our partnership with Signzy, we were looking to replace clunky, time-consuming, physical, and paper-dominated KYC process. This was indeed successful with the partnership of Signzy with eKYC, where we replaced a bunch of papers and to and fro between a merchant and an acquirer with eKYC, which certainly brought down, as I said, the cost of onboarding and increased the speed of onboarding by 90%. What we are now closely working with Signzy is to take the digital onboarding to the next level with video KYC, as Arpit just mentioned. This is the buzz, and along with Signzy and a bunch of our customers, banks who are both acquirers and some issuers, we are looking at bringing video KYC, which is now approved by the regulators. And this particular solution has actually gathered momentum, and I believe is going to be one of the most preferred ways, both from a banking system as well as from a consumer, because this will be contactless, this will be paperless, and remote. You don't have to step out of your home or office to do a KYC. Just a few years ago, you had to take a bunch of papers multiple times to do a KYC, which changed to eKYC, where Signzy's solution would go to a merchant or a bank and then onboard the customer electronically. That is now going to a video mode, which I believe is the ultimate solution from a KYC point of view.
How
And
would how would this work? I mean, I'm very curious. Personally, I'm very curious to know how a video KYC would work. Please, sorry.
we have the expert. Arpit, do you want to walk through, Rudra, with how a video KYC would work?
Yeah. So I think, Rudra, it's as simple as the way we joined this call, right? You would get a link. You just click on that link. It establishes a secure connection. As a technology, because you're trying to avoid frauds, this is financial. So you check for a bunch of things like VPNs. You check for negative browsers. So you have to validate a lot of things in the process. And then you would ask the person to show some iCard during that process. Post that, the AI will check the face on the video versus the ID face. It will do a bunch of algorithms to arrive at a risk score of that customer basis. All the data is collecting digitally. You can use it to deliver different products. As Rajeev said, you can do it to deliver credit cards. You can do it to deliver merchant accounts, etc. Depending on that, you may have certain different rules, and then all this will go to a backend team in real time, in almost like 2 minutes of you closing that session, and then somebody would just approve your account, and like in 15-20 minutes you're like live with that bank.
So essentially, it sees your face expressions to see how sort of credible you are, how truthful you are, and things like that. Is it this technology?
I think we have not reached there yet. I do believe that can be the future. We have in fact
Really interesting.
we have in fact done some research work on it that may become a future tomorrow, become actual reality tomorrow. But today, of course, you're doing basis a lot of data you're collecting from systems, from the person. The government of India has actually allowed a lot of database pings, so you're collecting database from the government databases, etc.
The government is extremely forward thinking in this regard, which is a great plus.
Yeah.
No, but the reason I asked that question is because in the advertising world, there is this technology that a lot of companies are now using to sort of recognize your facial expressions and see that. So this is for ad testing, right? I mean, what do you recognize in an ad? Do you like it or not? And they sort of look at your face expressions and can get a sentiment. So I'm just thinking, can that technology be used for sort of this sort of a requirement as well? Anyway,
Yeah, I
yeah,
think you will reach there. I mean, just the only difference is that the level of accuracy you need to, for example, give you a loan is
yeah.
very different. Like you will be okay with a 20-30% error margin
Yeah,
in
Martin,
a ad scenario, but
correct.
you won't be okay with that when you're giving loan to someone.
Stakes are much higher, obviously.
Yeah,
Stakes
yeah.
are higher.
So, for
Um,
example, for
sorry.
example, AI deployments, bank, we had to get an accuracy of 99.9%. It
Wow.
is when the bank approved our solution, and that's higher than a human error rate actually. So the level of accuracy needed sometimes is why certain solution is not being adopted.
Mr. Rajiv, sorry, you were saying something else at that point, and we digressed because I found that very interesting. Please. Sorry.
Yeah, I'll just give one more example because we're talking about acceptance, and you must have recently read about one of the solutions that we launched, which ties in with what we are discussing, and that is a solution called SoftPOS, which primarily is a do-it-yourself, mobile-first, and mobile-only acceptance that we have recently launched in partnership with Axis Bank and Worldline. And the way it works is irrespective where the potential merchant is in India, as long as that merchant has got a NFC enabled mobile phone, which is increasing by the minute. Almost everybody has got a smartphone. As long as they got a smartphone, and if it is an NFC enabled, that merchant, in partnership with a partner like Signzy on the video KYC or eKYC, can self KYC himself or herself, who's a SME sitting in some remote corner of the country, and then go and set themselves up as a merchant without the need of an acquiring bank or a payment facilitator to go physically and do the onboarding of the merchant. So imagine with a smartphone, a person in some remote corner of the country will be able to e-KYC themselves, set themselves as a digital acceptance merchant, and start accepting payments, link payments, tap on phone. If the mobile phone is NFC enabled, one can tap on the phone and pay, and all the QRs is something which we have recently launched. And this is just not an acceptance solution. We have built a number of other things on this solution. For instance, it has got cash too, along with digital acceptance. The merchant can capture all the cash transactions on the same device, can open the store as an online dukan, practically put up their store for his customers to go check and buy stuff from the comfort of their homes, and several other features like this to bring down, as I mentioned earlier, the cost of acceptance and increase the speed of deployment. And in order for us to get to the 20 million merchants as quickly as possible, we are constantly working on all these fronts. And SoftPOS is an example that I just wanted to give, where all these things that we are discussing, whether it is e-KYC, video KYC, or self-onboarding of a merchant, is something which is happening in India. And we are the first country in the world to provide a comprehensive end-to-end SoftPOS solution the way I just described.
Thank you, Mr. Rajeev. Thank you, Arpit. I think the most interesting part of this discussion is how the industry, the financial services and the fintech industry has taken this challenge with open arms. Since the demonetization till today, the pace at which digital payments ecosystem has sort of evolved, grown, matured, and really you find a lot more people being comfortable being having one of the biggest questions is definitely security and faith, right, that this will work. And I think this country has sort of taken it internalized this so in such a strong way, so that the government's vision has really sort of done wonderful. I mean, one of the numbers that a few days back we were having a conversation with somebody in the government was that not only credit card transactions, but even UPI and other online transactions have grown at a phenomenal pace over the last few years. I think this is a great note at which to leave this conversation. There's so much more to talk about, but we only have so much time. This brings us to the end of our discussion. A big thank you to Arpit and Rajeev for joining us today. Thanks a lot. We will be back with more such content. See you.
Thank you.
Thank you.
Thank you.
Appreciate it.